Well, I love my baby, heart and soul. Love like ice will never grow old. She's my sweet little thing. She's my pride and joy. She's my sweet little baby. I'm my little lover boy. Well, I love my baby, fine as wine. Stick with her till the end of time. She's my sweet little thing. She's my pride and joy. She's my sweet little baby. I'm my little lover boy. Good evening, fellow billionaires. This is Silver 5150 with your late edition report on August 9th, 2020. This is a special report I said I was going to do, and I really didn't know what I was going to talk about. But then, of course, I got a message from Creo, the lone traveler. How you doing out there tonight, Creo? And we're going to address this issue about how I try to read market movement to determine future silver price. And like I said before in my earlier videos, it's about 11% accuracy rating. Okay, so if that's still of interest to you, stick around. But yeah, about 11% of the time I'm right. Okay, but I've been watching the markets tonight. I've been watching the futures markets tonight in silver, and it looks like it wants to try to post a green day tomorrow. Now tonight you can see it actually started out pretty high when the futures opened, right at 1800, I think Pacific Standard Time, and now we're already down quite a bit from our over 29 high, or actually that was from Friday. So anyway, tonight, yeah, we got up to a high of about 28.5, I think, and now we're down to 28.09, and just kind of cruising right along. But there's a number of things that go into play for me when I look to see what's going on with the silver market, trying to speculate on what's going to happen tomorrow. And so let me see if we can move up here and look at one of my favorite indexes, and this is going to be the euro to dollar index. And the euro to dollar index right now says that the euro is up, which means the dollar is down, and the dollar is down by 10 basis points, okay, right now, okay, while the euro is up by 12 basis points. And so that right there, as I told you guys before, is an indicator in that anything priced in dollars, when the dollar is lower, those items will be higher. Anything priced in dollars, when the dollar is higher on the index, those prices will be lower. Right now, the dollar is lower, so those things are higher. It's as simple as that. And since the euro and the dollar are reverse to each other, okay, they're the reverse of each other, then that both just stands a reason that the euro is going to be higher tonight because the dollar is lower. So just repeating myself to try to drive it home. Okay, so you've got the silver price doing what it's doing. We got the gold price doing what it's doing. And the reason why the gold price is important for me when it comes to silver is because I need to know that commodities are at least trying to move in unison. If I see silver running away and it doesn't have gold to confirm it, then I'm not a buyer. I'm not a believer that the price is going to go higher. Okay. Now we're talking higher tonight because we can see the indicators or the indices are showing higher metals prices tomorrow. But the reverse goes for lower prices. I'd be looking at this and maybe these boards would be red. Maybe gold would be red. Maybe silver would be red, right? And I'd be going, it's like, okay, are they trending downward or are they trending flat in the red? And if so, how long have they been doing it? And are the other indices around them confirming it? What is the dollar doing right now? Is the dollar in the green? If the metals are in the red, then the dollar should be in the green. And so all these indicators basically is to see that general market movement is indicative or conducive to economic reality. Because economic reality says that in order to have higher asset prices, you have to have lower currency prices, whatever currency those assets are denominated in. And most assets around the globe are denominated in dollars. Okay, the dollar is the king of the currencies on the planet. Most countries have to use it. We have the petrodollar, which we talked about before, and that is any oil exchange from one country to the other, no matter where they are in the globe. They have to transact in dollars. That is part of the petrodollar system that we have right now that we put in place, I think, back in '75 with Henry Kissinger and OPEC. So OPEC's agreed to it. They'll only accept dollars for oil, And so that keeps the dollar strong-ish. But as we can see, it's having problems. Now, latest action here, we can see the dollar on Friday, I guess, or let's see, yeah, on Friday. It kind of did okay and whatnot. It actually spiked a bit during that day. And of course, this spike right here you see in the dollar, what does that mean? Because that was on the 8th, right? That means, that was on the 7th. That means that metals came down on that Friday. Because the dollar was up on Friday, spiked up, metals went down, and that is exactly the way it should have been. So, of course, I hope you guys took advantage of that on Friday, the lower prices and stuff. So, tomorrow, I don't know, man. I don't know. I don't see lower metals prices because another confirmation I use is the 10-year bond. I don't know why this thing's having a hard time focusing. The 10-year bond. And the 10-year bond basically is a comfort level you find in interest rates. So like the 10-year bond right now is up 4 basis points. Okay, which means that the 10-year interest rates, and they don't have a chart for that here, 10-year interest rates are going down a little bit. Okay, but the bond yield's going up, and bond yields is good for equity markets, which is reflected here in the equities. The U.S. 30 futures, which are the Dow futures, the U.S. 500 futures, which are the S&P 500 futures. Those are the main two indexes. The NASDAQ, that's from Friday, but the NASDAQ futures and the small cap S&P 5, small cap Russell 2K futures are usually in unison with the Dow and the S&P 500. So that's lined up. So the bond yield's headed in the right direction. Futures are headed in the right direction. Why? Because futures are priced in dollars, and the dollar is what? The dollar is down right now. The dollar is down. So that all makes sense. And then, of course, because gold and silver are priced in dollars, they're up right now. Okay? And so everything's lined up. So that tells me, unless some kind of really weird news story comes out, to say they had the stimulus or they didn't have the stimulus, because right now everything's reacting to the stimulus. Stimulus affects every asset class in a positive way because it's going to be central banks spending money like crazy to get people to, get out there and get money velocity moving. We talked about that a couple of weeks ago. So we'll continue to watch, and I'll do this. I'll do this throughout the night. I'll get up, probably go, to the can for a minute, and I'll come back and I'll check and see if everything's still on track. And then I know if we can maintain this posture, well into the wee hours of the morning and not have any kind of crazy dips, then we can expect there's going to be positive action in both stocks and metals tomorrow night, because the confirmation is that the dollar is down. These are the main two. The dollar is down and the euro is up. Okay? And they're maintaining a pretty steady line. If you look at this line here, they're both maintaining a pretty steady line going into the evening. And so let's just go ahead and you can watch these. You can watch these indicators. You can go to other websites. I think Bloomberg has charts you can watch. NetDania.com has the best charts, but I think you have to subscribe and all that stuff. I don't bother doing that. I just look at what I'm going to get from investing.com, because everything you need to know is up here, because we really are working in generalities. Like, you're not going to sit there and go, well, the dollar is only down 97 basis points, so I'm not going to buy until it's down 99. Well, no, you don't work that way. You just want to get generalities and stuff like that. So then, now that I've got an idea about how the markets are going to go, I sit there and I think to myself, okay, am I in position to buy? And if I am in position to buy, how much am I looking to buy? It's going to be up a little bit to flat tomorrow. Do I want to buy, or do I want to take a chance that the prices are going to come down on Tuesday? Well, under normal circumstances, and we talked about normalcy bias. Silver Game of Thrones did a great job talking about normalcy bias the other day. He says that this is not normal anymore. Like what we had before, we were getting like the 11, 12, 13, 14, $15 spot. That is no longer normal. And what we're in now, where we see like these 80-cent swings, these $2 swings, $1.50 swings, that's the new normal. And these levels that we're at, 28, 26, 29, these are the new normal. And so how do you decide when you're going to buy? You have to pick yourself a range, and that's what I do. I always pick myself a range, and I try to decide. I says, okay, so spot price is $28.09. Say, for instance, tomorrow, it's going to work its way up, and it's going to get up to like $28.90. I need to basically hold my nose and say, I need more silver in my stack. So I'm going to set a range on retail price, which, because we know the premium's a lot higher, I'm going to see if I can find something in the $35 range or less and work from there, because it gives you a lot more leeway and stuff. And just understand it. You're not going to be a big stack, it's not going to be a big stack thing, because you're not getting, very much silver versus the dollars as you used to. But you still want to get more silver, because every bit of silver you get, every ounce of silver you get, has the potential to go up to 10 times the amount you're going to pay for it today. And that's being conservative. I think it's going to go a lot higher than that. The only thing we need to be critical of, or we need to be watchful of, is at what point we start to head into hyperinflation. And it doesn't matter what the dollar value of silver is at that point. Basically, what matters is what you can get for it. Now, of course, if you have fixed debt and the idea is to get out of debt, then of course you want to buy silver and you want it to revalue at a higher dollar price. And in fact, as high as you can catch it, as close to the top as you can catch it. So you can take, as few ounces as possible, transform those into currency, into dollars, and then pay that dollar denominated fixed debt off with those inflated silver coins that are going to get you more dollars. You let the silver do the work. You buy now, you wait, and when the price point gets to something that you like, meaning like 2 or 3 times what you paid for it, then you can decide to make a move on your debt if you have some outstanding, or if you have enough silver and you've waited long enough to where now you're getting what we call a 10 bagger, meaning that silver is revaluated 10 times higher than you bought it. And those days are coming. I say that with confidence, complete confidence, simply because there's so many things in the pot now. I mean, we've got, problems, with the potential natural disasters over in China. We've got the new stimulus programs that are coming out for, from the Fed, and not just the Federal Reserve, other central banks around the globe. The IMF is going to be doing, that's the International Monetary Fund, the ECB, which is the European Central Bank. They're going to be doing stimulus. Prime Minister Abe over in Japan, he's already done, probably 10 to 15 to 20 trillion dollar, 20 yen, 10 to 15 to 20 trillion yen in stimulus already over in Japan. And then, of course, they're doing stuff in China, the People's Bank of China. They're doing stimulus. So all this stimulus is going out into the world. And the thing is very inconsistent or unrealistic with the debt clock is that the debt clock only does its valuations in dollars. All right. And because the debt clock only does its valuations in dollars, you think that $4,000 price you see for silver is just what we can expect. But no, there are other countries printing as much currency altogether as the United States is by itself. So we can expect even higher valuations as all this stuff goes on. There's plenty of other things that are thrown into the pot with the silver price going up to say 10 times what it's going to be. Let's talk about that mining gap we mentioned a couple of months ago, where you had a lot less mining going on during the first phase of Corona. And of course, as a result, a lot less silver came out of the ground. Libertad spiked to the moon, and they're still going higher because Mexico and Chile, and I think Argentina, they are some of the biggest silver producers in the world. And Peru. Yeah, and they scaled down to about 40% of what they normally produce. So you're not going to have a lot of production coming out of those countries, so there's going to be shortages. Now they're back on that low production stance. And that's going to play into things, as we get into next year and going on into 2022. All these things are going to play into silver and gold to a degree, but more so silver, because let's just talk about price points. The price point for gold right now, if you want a gold eagle, for example, you're probably going to pay over $2,000 for it, because spot price is over $2,000 and premiums are probably about $150. So $2,200 for an eagle, right? For a gold eagle. But for that same $2,200, you can probably get 75 silver eagles, okay? And at the rate that silver is going up compared to gold, which is about 3 times as fast as gold, you stand a chance to make 3 times the profit in the same amount of time as with gold. You just do. It's just that silver is harder to store, and you get more of it. That's very good and stuff, and you have more flexibility because there's more transactions in 77 ounces of silver versus an ounce of gold. I get all that, but you just want to, work with what you got. You want to get to that lower price point so you can get more transactions in your stack, more ounces in your stack for a commodity that's going to outperform not just any other commodity out there, but any other financial instrument on the planet. And in fact, I was talking with Silver Joker the other day, and do you realize when I was trying to tell you about, how credit can be crucial in helping you build your stack, silver is going to outperform credit, okay? Silver is going to outperform credit interest rates, is my point. The growth in silver is going to get to where it's going to make a 17% or even a 21% interest rate on a credit card seem laughable. But again, it comes down to your vigilance, your level of responsibility, taking care of that credit card. See, you can use the credit card as a tool, but it needs attention. You have to pay attention to it. You have to pay attention to what you owe. You have to pay attention to whatever the minimum payment is, if you want to pay the thing off. But just like with any other kind of debt, whether it's mortgage debt or student loan debt or any of that stuff, if it's not being relieved and it's not being waived and the interest rates aren't being withheld in order to keep you from having to pay it and you can defer it, if you have to satisfy that debt, it's the same principle. You want your silver to be valued as high as possible, hold on to it for as long as you can, and then finally let some of it go when it gets to the point to where it can easily handle your debt. To give an example, one of my plans is this. So say, for instance, I've got $120,000 of outstanding debt. Okay, you guys know I have quite a bit of silver, but I've got 1,000 ounces of silver allocated specifically for the extinguishing of my outstanding debt. Now, what does that mean? That means that 1,000 ounces of silver is going to have to probably go to, I don't know, let's say probably $350 an ounce, maybe. Let's see, so 1,000 ounces, 120 ounces. No, actually, oh my gosh, silver would only have to go to probably $130 an ounce for me to, at 1,000 ounces, $130 an ounce for me to go ahead and wipe out that debt with 1,000 ounces. So you get my drift, and you think $130 is kind of crazy and it's pretty far away, but when you look at what silver's done in the last couple of months, let's go ahead and move this chart up to the 1-day chart. Let's see, that's not good. Let's do the 1 month chart. Nope, that's too much. Let's do the weekly chart. Okay, there we go. So here's a good example, okay? We saw what happened down here in these doldrums, right? When we had down there the 11 to sub $12 price, all right? And I didn't buy there. I actually bought when it was over here, probably, close to $19, $20, right? But I am in the money here from $20 up, all right? Already in the money on my position. Now, on that 1,000 ounces, that would be, $10 per ounce. So I'm up $10,000 on that 1,000 ounces. But what happens when I get, further up, into higher levels? So it would actually be something like, silver going to, I guess, closer to $200 or $250 for me to get rid of my, $120,000 of debt. But I mean, honestly, there's nothing saying that, this silver is not going to go up, a lot further than that. Beyond $220, because like I said before, there's so many things in the mix. Lower supply, higher demand. Everybody's wanting to get into silver now and gold. And then mines are not producing as much as they were. All right. And let's not even get started on the comics. Good grief. They're having all kinds of problems. And the London Marketing Bullion Association, the LBMA, the London Bullion Marketing Association, they're having problems making deliveries on gold. And remember, I like for gold to confirm what silver is doing or is going to do. And that happened with gold first, where they came up on extreme shortages. They had 400-ounce good delivery bars that were supposed to be allocated to customer, and now they're having to take those bars and they're having to basically divide them up amongst customers and saying, well, you can invest in a quarter of a good delivery bar, so you can invest in 100 ounces of silver, but you can't have the whole bar to yourself. We've got to spread them out a little bit because we don't have that much. All right, well, silver's in the same boat, to where now the COMEX, they basically don't have any 1,000-ounce good delivery bars that I know of. And if they do, they don't have them for retailers to source out to retail customers. Maybe to their contract holders, but I don't even think they can cover all their contract holders, just a small percentage of them. So we're getting to what they call, the silver short squeeze. And, the short squeeze means we simply don't have the physical to cover the outstanding calls for delivery. And this doesn't seem like much to us, because anytime we go to a retailer, they've got stuff that's for sale. But notice how much stuff is on pre-sale now. A lot of stuff's on pre-sale. You got to wait for it, and you may get it, you may not. We had was it Yankee Stacking that had an order canceled on him, by APMEX. I've had a couple of things happen with me here recently. I had an order canceled on me through my credit card, according to one of the retailers. And then they came back later and said, you know what, here's a refund for the loss, and you're going to order the coins anyway, so we're going to give you a discount, and it's going to almost equal what you lost and stuff. But there's all these things that are going on, all these hangups and stuff, and I'm telling you, as far as actual deliverables in silver, we're going to see those inventories shrink. We're going to see the number of windows shrink. A lot of us have been stacking for a long time. We've seen that, to where the windows have shrank as far as the inventory they've had. So again, these are all things to consider if you're going to buy. Say, well, how much is the window closing? Am I going to have enough time for to get enough cash together to buy some silver, or should I just buy a little tiny bit now? Eat the shipping, eat the what do you call it? The shipping and the volume premiums, and then of course the taxes if you're in a place where they get taxed and stuff. But these are all things to consider. But before you make that move, you look at your charts and you say, okay, is everything lined up? So the silver price looks like it's going up tonight. That's all fine and good. But does the euro, is it headed up to confirm that? Yes, the euro's headed up to confirm that. Not greatly, but it is in the green, okay? Does that mean, is the dollar in the red then? And you look and, of course, you see the dollar is in the red. And that's another confirmation. The Treasury, that is supposed to reflect positive activity in markets, be it metals or equities, doesn't matter. Is it in the green? And yes, it is. It's in the green. So that's a confirmation. Of course, the final confirmation comes from its big yellow brother, the big yellow metal gold, and it's confirming that silver is going to be up tomorrow. Do I want to buy up, or do I want to try to wait and see if silver is going to come down? Well, guys, that right there, that's going to go into Tuesday. Based on everything we're seeing right now, in my mind, silver's going to be up tomorrow, and it's going to go up, and it's going to put on gains tomorrow. So if I was going to buy, even though silver's going up, I would buy right now. Because I think as the Asian market closes, which is the weakest point for the gold and silver markets, meaning they can be smashed down easier than any other time, I think it's just going to get harder for a smackdown to happen when London opens up. I think at 2 a.m. Eastern Pacific Standard Time in the United States. And then, of course, when the United States market opens, at I think 9:30, Eastern Standard Time, then it's going to be even more positive for the metals, and so you're going to get a worse price for buying, so to speak. If you're already stacked in and you've got your stack together, then you're going to be cheering a little bit. That's just kind of the way it goes. So the question now becomes: do you hang on and wait to see if there's a dip this week? And all we have to go on are two things: past events, okay, way in the back, way back past events, and recent past events. Now, way back, we know that usually over the weekend, governments and central banks and exchanges, commodities exchange and the London Bullion Marketing Association, they would get together either news stories or extra funds or phony contracts to be able to dump into the markets on Monday, because it takes all weekend to get it together, and they would be able to send the markets down on Monday. Now it looks like they can't do that per se, or if they do, they'll try to get something together at the last minute, but it's not going to last. This Friday, they showed us that they can go ahead and take their licks during the week and let metals rise, and then on Friday, going into the weekend, they can perform a smackdown. So that's really all we got to go on. Your best odds, based on what we know from recent past events, is to hang on until Friday to see if they'll repeat their pattern and try to initiate a smackdown going into the weekend. Because the one thing they don't want is positive sentiment building in precious metals at the end of the week, and people feeling all jubilant and happy to buy and stuff coming into Monday. They want people to be a little scared of the markets over the weekend and then be apprehensive on Monday and then do whatever voodoo they're going to do then. So, that's really all you got to go on. And this is why I say I only have 11% rating or success rate, because it's really hard to put it all together. But all you can do is just look at your data, man. Just look at your data. Look at your silver. In the green right now. It looks like it's climbing, Based on this chart, let's go to the 1 minute chart, and it'll tell you a lot more. And you can see this action is kind of flat. It's kind of bobbling along there with the alligator teeth. But then the euro. Is the euro up? Yes, the euro is up. Is it climbing? No, it's not climbing. It's actually dropping a little bit, and it's close to the flat line. So, that could be kind of iffy. But then again, is the dollar close to its flat line on the way up? And I wouldn't say it too much. Let's see if we can get the 1 minute chart on here. Come on. There it goes. The 1 minute chart shows that it is, now that does not look like the 1 minute chart. It is. The 1 minute chart looks like the dollar is climbing a little bit. So we might actually see some reversal action or some flat action on gold and silver. But based on what we're saying gold right now, yeah, that doesn't look too flat to me. It looks like gold's actually tapering off too. So that gives us, a reason to believe that there will be a little bit of reversal. But remember, we're going into Monday when they've had all weekend to try to smash metals down. They should have opened down, but they didn't have enough to do that. So maybe they can just slowly try to drive it down tomorrow, which means going into the wee hours in the morning, depending on where you're at, you might want to check to see if metals are working towards your favor, because every penny, of course, goes down is less you have to pay per ounce. And, you want to watch and see if you can get that lowest price. But guys, I'm going to tell you, the overall sentiment is this. The best time to buy silver was back in 2000. Hey, come on, stop that. Was back in 2004. Okay. The second best time to buy silver was back 3 weeks ago. Okay. The third best time to buy silver is right now, because the odds are really, really good that silver is going to continue to go up here. I wouldn't say violently, but I can tell you this: watch out for level, $32 in silver and $2,200 spot gold. $32 spot silver, $32 spot gold. $2,200 spot gold. And if those two are consistently closing at those levels, silver at $32 and gold at $2,200, you're going to see another spike up. And once that spike begins, nobody knows what the next stop is for gold, because gold already passed its all-time high, but we know the next stop for silver is $50. Okay? So think about that when you decide to plan for your purchasing. All right? That was a lot of yammering, but that's what I do here, and I hope that kind of cleared things up. But I just basically go through my different, charts and indexes, the 10-year bond, to see if it's being positive or negative. And if it's being negative, that is negative for equities, and that's negative for gold and silver. But it's positive for the dollar. The dollar is negative. That means it's positive for gold and silver, and it's going to be positive for equities, meaning stocks too. As you can see here in the futures look good right now if you're in stocks. And of course, that means the dollar is down and the euro is up. Euro is up. That's confirmed. So all these different things are confirming that silver, as a commodity, is going to move in that positive direction tomorrow. The reverse of all those things I just told you means silver's going to be moving down, and it's up to you to pick the lowest price to try to find the time when to buy. But there's other things that come into play. Where are you going to shop at? Use your shopping techniques to find the best deals. If you know how to coupon, do some couponing. If you know how to buy the fractional stuff to get the amount of ounces you want but not pay too much to do it, then go ahead and do that. And then, of course, if you can avoid things like taxes and shipping fees and volume pricing, then you can save a heck of a lot more than you can by watching the spot price, even if the spot price moves around $1 or $2. That other stuff is the stuff hanging on the outside of the actual purchase that can save you the most money. So anyway, I hope this helped. I hope this made some sense. I repeated some things, misspoke on some things, but I hope you got my gist. The gist is to compile as much relevant data as you can to determine what the possible outcome of silver pricing is in the next 24 to 36 hours. That's really all you can do. Then figure out the best way to spend your pennies, but understand that if I only have an 11% success rating with this, then you can expect that you're going to probably have about the same. Unless you're gifted, you'll have a little bit more, but trust me, it's still enough to frustrate you. All right? I'm Silver5150 telling you your stack is not whack, and that just 10 ounces to your name keeps you 99% ahead of the game. But what do we want? We want to be 100% ahead of the game. 100% ahead of the game, so that when the economy rolls over and it's time to start over, we can make the changes that need to be made because we'll have the capital to do it. Taking your regular money and turning it into super money so you can do super things on the other side of this. All right, guys? Like, share, subscribe, comment, and we'll catch you either in a random post or when I come back off vacation a week from now. Have a good night and take care.